Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CASELLA Waste SYSTEMS INC quarterly report. CASELLA Waste Systems provides a range of services to various customers across the United States. The company's offerings include solid waste collection and disposal transfer services, recycling services, organic services, non-hazardous solid waste services, collections, transfer stations, recycling and disposal operations, material marketing, fibers, corrugated cardboard, newsprint, plastics, glass, ferrous metals, and aluminum. The decline in CASELLA Waste Systems Inc. CWSD stock price by -10.94% over the past year can be attributed to several key events and factors. The most significant contributor was the Q2 2025 earnings miss, where the company reported an EPS of $0.08, significantly lower than the forecasted $0.33, resulting in a negative surprise of 75.76%. Despite revenue exceeding expectations, this miss led to a 6.14% drop in stock price. The repeated 52-week lows throughout September and October 2025 further exacerbated the decline. Analysts mixed to negative ratings, including UBS Group's lowered target price and Barclays' underweight rating, also contributed to the stock's downward trend. These factors collectively led to a substantial drop in CASELLA Waste Systems Inc.'s stock price over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. Acquisitions in 2025 contributed to revenue growth. Price increases led to higher solid waste revenues. Volume increases also boosted solid waste revenue growth. Higher other processing prices added to revenue. Revenue decline drivers. Lower collection volume resulted in a quarterly decline of $0.6 million. Landfill gas-to-energy revenue declined by 57.1%. Regional revenue growth. The Western region saw a plus 32.2% increase for 3 months and plus 23.4% for 9 months. The Mid-Atlantic segment experienced a plus 40.6% increase for 3 months and plus 67.8% for 9 months. The Resource segment had a plus 7.7% increase for 3 months and plus 9.1% for 9 months. Segmental revenue growth. Solid waste collection and disposal services were the main driver of revenue growth. Landfill gas-to-energy services, processing services, and national accounts business also contributed to revenue growth. Net income and profit margin changes. A shift in favor of growth. The financial summary reveals a significant change in net income and profit margins for the company. In Q3 2025, net income increased by 72.6% compared to Q3 2024, while year-to-date, YTD 2025 saw a 20.2% increase over YTD 2024. However, profit margins experienced mixed results. Operating income margin decreased in both Q3 and YTD periods, dropping from 5.9% to 6.1% and 4.8% to 3.8%, respectively. Conversely, net income margin improved in Q3 2025, rising from 1.4% to 2.1%. The reasons behind these changes are multifaceted. A decrease in charges related to acquisition activities contributed to the increase in net income. Additionally, revenue growth and lower expenses from acquisition activities positively impacted profit margins. The company's flexible pricing structures and cost recovery fees also played a role in improving profitability. Overall, while operating income margin decreased, the improvement in net income margin suggests that the company is moving towards more sustainable growth. The company's ability to generate positive operating cash flow is inconsistent. While in some years, such as 2025 and 2024, the net cash provided by operating activities was $233,213 and $171,594 respectively, there are instances where it generates negative operating cash flow, like in 2025, page 52. This variability indicates that the company's financial performance is not stable. The company's financial health has shown some improvement in terms of its debt level and interest expenses. The debt level decreased by 10% from 2023 to 2024, indicating a reduction in the company's borrowing needs. Additionally, net cash used in financing activities associated with debt activity also decreased by $37.8 million in 2025 compared to 2024. Furthermore, interest expenses have also seen a decline. Interest expenses decreased by $361,000, 0.77%, from 2024 to 2025, and there was a decrease of $1.6 million in the 9 months ended September 30, 2025. These changes suggest that the company is managing its debt effectively and reducing its interest burden. However, it's worth noting that while these changes are positive, they may not be significant enough to indicate a substantial shift in the company's financial health. Regional performance overview. The financial performance of various segments and regions has been mixed. The Eastern region and Mid-Atlantic region have performed well, with the former achieving significant revenue and operating income growth. In contrast, the Western region struggled, resulting in a loss in operating income. Resource Solutions also demonstrated strong performance, with notable revenue and operating income gains. However, the Eastern United States region is vulnerable to economic downturns, while certain months are affected by seasonality, leading to poor performance during late fall, winter, and early spring periods. Management's outlook: a focus on growth and efficiency. The company has outlined a growth-oriented strategy through acquisitions, aiming to expand service areas and densify existing operations. To fund these efforts, management expects sufficient cash flow from operations and financing activities for at least the next 12 months. Additionally, flexible pricing structures and cost recovery fees will help mitigate inflationary costs, while operating efficiency programs will improve productivity and reduce service costs. The company also anticipates continued seasonality in revenue, with higher earnings during late spring, summer, and early fall months. Overall, management's strategy prioritizes growth through strategic acquisitions and operational improvements to drive long-term success. The company's financial transactions involved both acquisitions and divestitures. In terms of acquisitions, the company reported significant increases in revenue, with a 3-month increase of $24.3 million and a 9-month increase of $95.8 million as of September 30, 2025. On the other hand, the company also engaged in divestitures, which involved settling obligations and repaying debts. Specifically, it repaid FAME Bonds 2005 ARA-3 in full using proceeds from the issuance of FAME Bonds 2024, and settled obligations totaling $990 for the years 2024 and 2025. That concludes the financial summary for CASELLA Waste SYSTEMS INC. Feel free to comment below, and I will be happy to answer them when possible.